It's make or break time here for the stock market. Are we bullish? Are we bearish? Are we in between and chopping around and everyone's just guesstimating which direction and getting their emotions involved about which way we're going to go in the short term? All right, so welcome to the channel, everybody. My name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. I've been an entrepreneur for the last 8 years full time. I've been a trader for the last 6, going on 7. And during this market right here, it's very, very similar to in 2025, what we experienced at the beginning of 2022. And also, if you have traded or if you remember the first Trump tariffs in 2018, we had some volatility, some uncertainty, and some indecision. Now, this week, if you're not too familiar, we had some important news data that came out, which was the FOMC decision day on Wednesday. Okay. And that decision was to pause the rate at the time of this recording and maybe have a couple of rate cuts the remainder of 2025. But still, Fed Powell didn't sound too certain about this, these rate cuts, as he's been saying that will continue as he aggressively cut in 2024, if you remember, right before the election. All right. So that's a mouthful. My objective today for you in this video is to give you a quick market update. Give you some levels about what, if you watched this prior to Friday, March 21st, 2025, give you some updates and see where we might go tomorrow, and also prepare folks for the remainder of the rest of March 2025, the month, how the month will end, and what you should look forward to going into the summer months. All right, Q2. With that being said, if you'd like to join our community, Leverage University, we do have a Discord maybe you're a career professional, maybe you're an entrepreneurial spirited person, maybe you're a full-time entrepreneur and you want to get involved with a community of like-minded individuals. We'd love to have you inside. And hey, this trading floor is also available to you. So I'll show you that as we go along through this video, but make sure you click that link below, join Leverage University, join us inside the community to get our trading floor advice and also entrepreneurship advice as well. All right. With that being said, let's jump into the charts and also the fundamental data and what is on the docket for the remainder of the week. Okay. A couple of quick updates. We had Nike that reported earnings, as well as Micron Technology in the semiconductor sector. All right. And you can see the Micron shares jumped on earnings beat. Okay. So that was a decent guidance as data center revenue triples. That's amazing, right? So we'll check on the charts, what that might look like for tomorrow. So that may affect NVIDIA a little bit, AMD a little bit, but we'll see. We don't know. We've seen crazier things when earnings beats have happened before, where they sell off towards the end of the week. And also we have Opex, which I'll talk about as we go along this video as well. Opex, options expiration day, or quad witching, as some of you may be experienced with on Friday, March 21st. All right. Nike expects sales will plunge in current quarter as it faces tariff sliding consumer confidence. Not good for Nike, as they've already been struggling even with their new CEO. So very interesting there. Trump signs his executive order to increase mineral production in the U.S. And he also signed an executive order to eliminate the education department, the federal education department. So a lot of stuff going on here. And what I want to always accomplish, especially for my newer viewers, is to keep it simple, stupid. All right. Keep it simple. I put stupid because I think that's just that word. I don't know what it is. It just bothers me maybe, but I want to make sure that everyone's educated, informed, and empowered. All right. So without further ado, let's jump on the charts. That's where the money is made. And what I want to do is a little bonus. If you stick around to the end, I'll show you kind of how I execute on Robinhood Legend. While also charting, which I like charting primarily on Webull. Okay. But I do trade on Robinhood ever since they came out with the Robinhood Legend platform, which is their new, more in-depth desktop platform where you can get in and out of trades very quickly. All right. And that's what we love as day traders more specifically. All right. So we got a couple of things on SPY and QQQ that we want to analyze here, and I'll start from a very broad view. All right. As you've been watching me, for some of those that have been keeping up to date with videos, we've been on this teeter-totter of whether we're retracing all the way back up to the all-time highs or whether we have lower to go. And a lot of folks are trying to guesstimate and trying to predict based off typically emotions whether this is the bottom. Now, if you want to be a true investor or trader, you have to control your emotions to understand that, hey, I've got to be prepared for both scenarios. Okay. So the first scenario is that I'm on the SPY, the S&P 500 ETF, okay, SPY. And I want you to see here that we are in correction territory, okay? Correction is a 10% from the most recent highs, okay? And if you see right there, I dragged it pretty quickly. Do you see that in that gray box? 10.36%. So anytime you're correcting from the all-time highs, that is typically a buy signal, okay? However, there's a lot of folks that really aren't prepared for a potential bear market or lower. They're like, oh, we've been in a bull market forever. 2021, people were saying there was a recession, and then it recovered in 2023 and recovered in 2024, and we've just been bullish. Yes, long term, right? But if you are a newer investor, meaning this is the first time you're in the markets, or whether you were late to the party for some of these investments, right? 2022 was very, very lucrative for people who were patient and bought the dip at that time, and also for those that were able to double down on the stocks and hold strong. So if they were up in 2021, let me show you what that looks like. Okay. Let me go on a weekly chart here. Again, if you've seen this before, this is just a continuous reminder of how to analyze the market. Okay. So this was 2020 to 2021 right here. Okay. Straight up move, recovery from this flash crash, panic sell from the pandemic. Okay. And we recovered all 2021. But what typically happens is when we have some type of correction, or in this case, a crash, okay, because that was a 30+% pullback from those most recent highs, right? In that case, you typically have the Fed, if you remember, start cutting rates very aggressively, okay? And when you cut rates out aggressively, you have a spur of buying, or consumers or buyers or investors putting their money back into the markets. But does that mean a stable economy? Yes and no, okay? Because when you're having the Fed interrupted and doing something drastic like that, you can have a short squeeze, and we squeeze everything back up because everyone panic sells, they sell out of their position, and then people start buying up, and then we have a squeeze for a year, okay? Now, the market has to correct and come back to its natural homeostasis, come back home, how it's typically supposed to move, okay? This was a crash. This was their tariffs again in 2018, and then tariffs in 2018. So you see 2018 was a little rocky right there. Pull back, and then we naturally progress back on the upside, okay? But what I am trying to kind of prepare newer investors, and for my experienced ones, hopefully you're kind of explaining the same reality and not giving people just false hope of saying, oh, it'll recover. You don't know everyone's scenario. Meaning if someone is having their retirement account that could potentially be hit, wouldn't they want to know the reality of that and how to prepare for it? Kind of like 2022, and they don't panic sell. Get them emotionally and spiritually ready for something if that comes, okay? So very similar to 2008, 2007, if someone were to be told the truth, right? Because a lot of, and I only speak for myself because it's on a public platform, a lot of society, okay, the folks that are educating, and I may be one of them to you, are typically coming from a vantage point of already being ahead. So if you're already ahead, meaning you're holding from 2015, 2020, right? You're not concerned about this, right? But think about the first time that you jump into the market, right? Think about the first time that you may have experienced a little bit of red and how that made you feel, right? So if you're already in that emotional state, you're not concerned. I'm speaking to your family members. I'm speaking to you to go tell somebody, hey, it's going to be okay. Keep buying. It's going to be fine, right? Be patient. All those things, right? Hold your capital. Hold your cash if you're not comfortable. Just wait, right? Until you feel comfortable, okay? So with that being said, let's go back into the technicals, all right? Hopefully that helps somebody out a little bit. 10% correction, buy zone, okay? We can come down another 10%, okay? That would be quote unquote crash territory, which would be in the lower 500s of SPY. 520, maybe it'd be a little bit more specific. That'll get us in 15, 520. And then crash territory, very similar to 2020, right? We're coming back down into that potential gap fill at 476. And that'll be the retest of that previous high from 2021. Okay. Am I saying something drastic is going to happen like that? No, it would look more something like this if it did happen. Okay. We come here, come back up, come here, come back up, come here, and come back down. All right. It would look more similar to that typically as a natural way of stair stepping its way down, if so. All right. So that being said, let me show you another thing why it's in a very critical zone and you need to be careful about just confirming that this is the bottom. I'm not saying it can't be the bottom, but confirming. So you may have already heard this from other thought leaders in this space that this moving average here on a daily time frame, we are rejecting underneath the 200-day moving average. Okay. What that means is that the moving averages are an average price that the stock typically wants to ride the wave above if we were to remain bullish. I want you to look at this orange line on a daily time frame. Okay. Back in 2021. Okay. Do you see this flash crash here? We were riding in and riding in and riding in 2019, and we got underneath it on a daily in 2020. That was right in March. See how we rode underneath it, popped back up, but that pop was roughly about a week of a pop, right? Correction, pop, and then people don't confirm, and then we drastically go lower, right? And this was all of March, if you remember that, okay? This is 2020, March, right? So we got underneath that orange line on a daily time frame. We haven't had that for almost 2 years, okay? We ride the wave in 2021. We drop below it on a daily. We retrace, right? People try to time the bottom, right? You can buy this dip. Like I said, here's 2022. There's that correction, 12% that time. It corrected back up. Cool. Everyone's thinking, oh, all-time highs. Nope. That's a lower high, fall back underneath it and struggling all year. And then we kind of naturally progress, like I just showed you there, underneath that orange 200-day moving average. And we pull back all year about 20-something%. Okay. Am I calling this a 2022 just yet? No, because we have to confirm that this is going to hold true. Okay. So do you see there's the first sign? We have not ever got underneath that 200-day moving average in over 2 years. Ride it, that orange line. These are other moving averages, the 100-day, 50-day, 20-day. I'm looking at this bigger time frame, which is that 200. Do you see how we pop below and how we're at this critical stage that we're trying to recover? Rejection. This is the almost fourth rejection. If you were to count the bullish candles, the green days, rejection 1, rejection 2, rejection 3. Each time we closed slightly lower the body of the candle. So that one closed roughly at 567. Okay. That is where the bulls really want to get back above and hold. Right. And today, if you see, we closed that candle below that. Okay. So that is technically right now, if something changes tomorrow, it's going to be very critical. That is a lower high. Okay. Now, some people might say, well, Brian, you don't know what you're talking about. That's fine. This is a public platform. You can have your opinion. We're forming higher. That's great. This is a very short time frame. This is from the 13th to the 20th. We're talking about 7 days. I'm not really concerned about a week. I'm looking at this bigger picture here of still forming technically lower highs, right? And we're showing some sign of correction. Do you see we've come out of this trend and now we're in this trend. So it's trying to break out. However, Tomorrow is going to be very pivotal because is this a bear flag, which would look very similar to this, to retest the lows at 550. Okay. If we can double bottom there, there's a potential bullish case in a squeeze. Okay. Let me change this for my visual folks so you can see the difference. Right. If we break that low aggressively like that, that is a sign for much lower. Down into 530, down into that potential 520. Okay. And I'm not saying it's going to be all in one red candle like that. The SPY is going to drop 20 points in one day. Okay. But I am saying that that is a signal. If we start having this breakout of here like that, that's a little concerning. Okay. So tomorrow, bullish case on SPY. We get above 570 confidently. Okay. So we get above 570, reclaim 567, and we get above 570. Now, Brian, what the heck happened today? I thought today was the day, right? Again, for my folks that have never seen me before, this dark black area is when the market's open. The light gray area is when the market is closed for the New York session. This is more specifically for options or just the New York American market. Okay. New York session, 9:30 Eastern to 4 p.m. Eastern Standard Time. Okay. So you see this big bullish candle right here off open, and you're like, oh man, we're gone. Right. And then immediately we give the whole move back. So every gain that you had today really pretty much went back to where it was. Okay. And we tried to recover a little bit towards the end. Okay. Again, we closed underneath that 5, 6, 7. So tomorrow, what do you really want to see? You really want to see a break above 570 and then 571 to be confident. That would initiate the bulls regaining control above 570, okay, which would be this line. Now, when people say above, Brian, like I'm not well versed in that. I'm not in a community. I'm not in Leverage University. I'm not anyone else. I'm on my own, okay? I challenge you to get, if you don't know technicals, watch the channel, but get involved, get some mentorship from somebody, right? Try to understand this, because when someone mentions get above, right, that can mean a couple of different things. Typically, you want a longer time frame candle to close above that line, okay? Do you see today how this green candle did not close above 570, right? That closed at 568.96. So you want typically a 1 hour, 2 hour candle to kind of close above 570. Even if I go on the hourly, that hourly candle still closed underneath it. Okay. So you need an hourly candle to close above 570. Kind of like that. A higher time frame candle to close above that, because then that can be confirmed that this can be a short little pullback. It holds, and then we continue higher, and there's that squeeze up into those higher ends of the ranges, which would be 573 and then into 575, right? And then we're squeezing. Okay. So that is the bullish case, which can happen. Remember, I'm not here to say that what if is going to happen. You need to be prepared for both. You cannot have biases, but you can have a kind of a leaning towards something the more experience that you get. Okay. So the bearish case. Okay. Let me give you another bullish case. Brian, what if we pull back? Okay. What are some supports? On SPY, you've got roughly 563. Okay. And tomorrow it's going to be very tough, because if the bulls see this pullback again one more time, they might just start stop losses starting to get hit. Stop losses starting. Okay, let me get out. Okay, it's not really moving in the direction I really want it to. I'm just going to stop out and wait. All those stop losses triggered at a decent support level can have that just continue. If I were a bull, meaning I had calls or I had shares, and I stop out at that 563, if I start seeing it break below it, it could start getting a little bit more aggressive down into that 560. Okay. So you got 563 and 560 as roughly other nice supports for the bulls to trap bears in. So those are your two bullish cases for my folks that are only thinking upside, right? So that makes it tough for the bears to kind of confirm because they can get trapped, right? Either way, there's a bunch of traps happening. Bull trap, pull back the next day, right? Bears jump in. Oh, we're selling. Nope, trapped. Go up the next day, right? So you're trading in a very tight range here. And that's what I was talking about at the beginning of the video, is that we are really not going anywhere, right? We've got a couple of dips below, but we're trapped in this kind of zone of 560 to 569, 560, 569, 560, 569. Okay. So it's about a $9 range roughly on SPY. Okay. So until that range is confidently broken with those higher time frame candles, we might chop in this range until next week. Or tomorrow, one of the ranges break, and that will open up the floodgates either direction. Okay. My confidence side, again, if we break on an hourly candle below that 559 or 560, if I see our hourly candle below there like that, I'd want to wait to see where we pop back up into. Okay. When you see, if you want to trade more, like I like getting early entries. If you're in my live trading, you know that I have very little drawdown. I like to get starters in. I like to get into trades because I like to control and have my risk very tight. Okay. So I might get into trades a little bit earlier just because I might be a little bit more comfortable with that trade. But if you're a beginner or you're trying to learn how to properly do it, you want to wait for a clear confirmation. And I'm not saying I'm perfect either. I'm still testing new strategies, but you almost want something to get away from you, meaning let it break down. And then it's called a retest. Don't chase this like, oh man, it's a big red candle. Let me jump into puts. Wait for a candle on a 15-minute or a 30-minute to close. Wait for that. If you're playing puts, okay, wait for that green candle to come back up and confirm that it's turned this into a resistance, right? So for my Leverage University members, you know what I'm talking about. Let it confirm that that is resisting right there. And then you see sellers stepping in. Okay, cool. I like that. Let me jump in and then continue lower. Right? That's how you typically try to get safely into a trade. Like that. Okay? Let it fall. Push back up. See where some sellers might step back in. Okay? And then take it down even further. All right? So, same thing with the upside. If you get in early, cool. If you're like, I'm just going to jump into calls off open, see what happens. Okay. That works for some of y'all. All right. But if you want, again, to understand how to make this sustainable, let it pop up. Right. Let it pop up. Let it retrace. See where it retraces down to and see where it holds. Okay. So this candle would turn red and it would turn back to green and pop back up like that. If you've never seen candle movement, you need to be in a community where you can see someone live trade or watch something. Okay. Comes down, pops back up. And then you can see that, oh, wow, okay, there's buyers that's holding as support. And then you can continue up. Okay. And it will look like that. Okay. So that is how to take it up and then how to properly take it down. Okay. Because, well, why is that the way to do it? Because today was a perfect example. All right. And I'm speaking to those folks who just are winning periodically here, not really having a strategy. Now they're just seeing green, putting in calls, seeing red, putting in puts. That might work for an extensive time, But if you really want to understand the skill set and you really want to understand why something happens so you can have a plan, look at this. Someone jumps into calls at open and they're green. They're like, I'm good. I'm just going to leave it in. Right? I'm green. There's no way it's going back down. And then next thing you know, they step away from their computer, their phone, they do whatever they're doing. It's happened, right? You know how I know? Because I used to be that. I still have done it to this day, right? Where you get a little bit too comfortable in your biases and you don't clarify that there's resistance up here. You don't chart it, you don't do anything. And you go into the day, you're all the way back down here and you're like, how am I down? Because you did not take profit and you got too comfortable and you just jumped in because, right? There you go. Cool. All right. So there are SPY and QQQ levels, SPY levels for you. Okay. So hopefully you took notes on SPY. SPY will give you the directive. It's like the GPS system of the overall market. So based off of what SPY is doing, typically I'm trading my specific stocks, primarily the tech stocks that I like to day trade right here in the blue. Okay. Apple, Tesla, Amazon, Google, Microsoft, Meta, NVIDIA, like these are all stocks that I personally like to trade on a day trade basis because they have volatility, they have movement, they have volume every day. Okay. So again, if you don't know what I'm talking about and you're like, man, I really want to learn what he's trying to say so I can understand these videos a little bit more, make sure you join Leverage University. Any of my members down below want to comment and say how maybe jumping from here over into live trading and the education and the boot camps and the mentorships, please let folks know unapologetically. All right. So let's jump into QQQ. All right. Again, QQQ, in my opinion, is a little bit more clear as far as how massive this bear flag could be. QQQ, primarily the tech index. Okay. If I jump on a daily, you see it's got a little bit higher on its 200-day moving average, but it's still below it. Okay. So it's using technically this 485 level as a resistance. You can see what happened at 485 last time, came down to 472, 485, came all the way back down, 485 down, 485 down, and then started using 485 or technically 486 as a support. So you can see right there on that candle, when we got back above roughly 487, we could take it up and confirm that that is a reclaim, as we call it. Okay. It got back above right here confidently. Look at that daily candle, how that candle closed above 488. It closed and it can continue higher. Okay. So again, for those of my bulls out there, which primarily a lot of people are, but in this case, you also have to understand how to trade a quote unquote bearish sentimented market. Okay. 2022, if you've never traded that or been more active in the markets during that time, you were just kind of like, yeah, okay, I'll buy the dip, whatever. I don't know what's going on. Right. That's when a lot of folks disappeared when the market was tanking and whatnot after 2021. So what does this look like? For my folks, they can put it in the comments or say it in your head. Okay. Push down with a big, strong push underneath that 485 level that used to be support. Okay. Big push down, straight down on that day. And now we have been grinding back up. And this would be technically what we call a bear flag. Okay. Bear flag looks like this. And then there's a flagpole. There's a little weak push up. And typically you follow with it going down like that. Okay. So in this case, there's the flagpole. There's the bearish flag. And these structures do not have to hold true. They can break down. So you're like, Brian, that was a bear flag. You said it was going down. Yeah, but it can. That's why I'm saying both directions. What if we get back above and it breaks out of there and breaks up into that 487 and 488 level? Okay, well, cool. That's no longer a bear flag. That's a reclaim. Turn that back green. Look to your left, and it looks identical to what happened previously when it got back above that level. Turn it into a support, and we continued higher to 497, and it started squeezing higher, just like that. Okay. So that's your bullish case for the upside. If we get, again, I'm not going to repeat myself on like SPY. If we get above that 487, I like a little bit better. 486, you can get a little bit of early entry, but you see here that those bulls got trapped multiple times above that 486 level. Touched right there, roughly 485. Nope. 485. Nope. 484. Nope. It's starting to struggle here, forming lower highs each time. So it's like, okay, I'm losing steam. Okay. So it's got to have a really strong push above that 486 into the 487s for you to say, cool, we're headed up. All right. Until then, treat this as a very, very strong daily resistance level. That is a very strong level. Sellers are stacked up in this level. So every time you push out, you better be prepared if you're in calls to go ahead and trim some of your position until we clear it. All right. Very similar to what happened here. There you go. Big bullish candle off open. Gave back the whole move. Are we going to try again tomorrow? Maybe. But if I see a little bit of weakness come in, could reject it again. And then if we see it fading even faster, back underneath 480, cool. We're breaking that trend, and we're probably heading pretty rapidly down back into that 472. Very similar to what happened right here. Okay. So watch it break back underneath 480. Okay. But let it push up as high as possible just to confirm if anyone's trying to trade puts. Okay. You want it to push up to confirm that that's more resistance. You do not typically want to get trapped with it pushing down immediately. Those are tougher trades because you can get trapped and squeeze right back up. Okay. That's why I tell my community or my clients or anybody that I'm teaching it to, do not chase whatever direction it's going. Confirm that that's a direction. Okay, we're heading down. I see some red candles. Cool. Let me confirm that we have more room. How do you confirm, Brian? Jump in the mentorship, jump in the community, join Leverage University. That's how you do it. Or try to figure it out yourself. Okay, I'm going to try to help people as much as possible, but it gets a little bit more difficult. Okay, IWM, same thing. So QQQ, everybody cool with that? Range, 485. Bottom end of the range, 480 is kind of that pivot point. So we see we close below 480. You want to use that 480 as a pivot point for you. Pivot point meaning it needs to try to hold it. If it breaks below it again, that can turn into resistance and start falling down to 471, 472. And then if we get drastic tomorrow, we could even come down and retest those lows down to 467. Okay. All right. IWM. It's a little bit stronger. It's been holding up the small caps, but it has roughly the same structure, but it's been building a little bit more than hard rejections like SPY and QQQ. So I'd be a little bit more careful with IWM that it's going to follow exactly like SPY and QQQ and just come straight down. But some levels here, roughly, 208, it's got to get above, okay? And then a pivot point could be like 206, okay? But the moves aren't as big. I do like trading IWM, but I liked trading it kind of in here when it was a little bit more volatile, back and forth. Here it's just kind of, slowly fading. Today was decent. Yesterday was decent, 203 to 207. Still 204 to 207. Good moves, but I don't really like the levels personally. But I would watch this pivot point here at 20, underneath 206 and underneath 205. Okay. But there's so many supports. There's 204.26, and then the previous day low, 203.24. So each of these levels you got to watch for it. It doesn't really have a clear path down. It could bounce at any one of those levels if you're trying to come down. It's got a lot of resistance up top. So not really too interested in that personally. All right, a couple stocks because I know I'm getting a little bit long-winded here, but hopefully you've learned something. Make sure you hit that like button, subscribe button. Apple. Beautiful bear flag looking like it's, really trying to reject that 218 level. pushed up into 219 roughly yesterday, and then rejected a little bit lower into 217 today. And it got a little bit drastic here, and we cleared the lows, and we kind of closed fairly weak. So I'd watch this on Apple clearly, maybe 215 being below 215, and see if we could start picking up some volume. One more little weak pop back up, maybe as high as possible back into 217, 218. But if we see it struggling around 215, very similar to what it did here, it can start fading and get a little bit more aggressive back down into 210. Okay. So I marked the previous day low, which was 212.20. So below that 212.20, I think we got nothing down but until 210, and then maybe retesting some of these lows at 208 and wait for a bigger retest. And this could get pretty aggressive down into the 200s. Okay, let me put on a bigger time frame for you. So see that kind of bear flag struggling right here at these previous supports in that range. Same type of concept. So this could be invalidated by it getting back above 220. That's really kind of my level, because this was a bear trap. Excuse me, a bull trap like no other. This 218 and close back below 220 pretty drastically. There's a close that's lower, and then what do we do tomorrow? Close, open up, and start, fading even faster, potentially. Okay, we shall see. All right, Amazon was really, really nice. Signaled that in the community again. That daily 200 stacking up again right there on Amazon. Just beautiful rejection here on 199 today. Signaled it in the community. A couple of our community members got shooken out of their position. I missed my entry after it already started moving. I was like, man, this is beautiful. Like that 199, 200 has been absolutely amazing the last couple of days. Just trading in this channel has been nice on Amazon. I should have taken a lot more advantage of this. I've been calling it out for over a week. I think I even mentioned it here on a Stock Sermon Sunday. Watch Amazon at 200, 199, rejecting every single time. Okay. And that is why it's right underneath this 200-day daily moving average, and right on it, rejected again. Okay. So I want Amazon bad to push up one more time, maybe into like the 196s is also a level. That's that pre-market from yesterday. So I'm going to mark that and see if I can maybe get that potentially as a rejection point. If it squeezes through that, I'm going to wait for that 199, but it's got to get really above 200. But I would confirm probably at 201, wait for a retest at 200, and then see if it can go up. Okay. But it's really struggling at that 199 level. Okay. So Amazon, if you haven't seen, okay, there is a little bit of gap to fill on Amazon that's remaining right here. Okay. So it usually shows up. I don't know why it's not showing up here. Maybe I'll put it on a 4-hour. There we go. So there's a little bit more gap to fill on Amazon down to that 186 and 185 level, and really like down into like the 183s and 180s. So stacked up buyers around 183, 184. But Amazon, you can see the structure, still another kind of bear flag, weak. It pushes up one more time. If it gets aggressive and the market gets weak, I like Amazon a lot for more weakness there. Okay. So watch out for Amazon trading in a range again. So you got to be mindful of this 191. You got to be mindful of that 199. Beautiful range trading on Amazon. And let's see if it can break out of one of those ranges tomorrow. Google, still trading this range. I liked Google for a while, but it's got a decent range here. And I personally like when some of these stocks that are less volatile traded in a really nice $3 to maybe $6 or $7 trading range. You can make a lot of money in some ranges if you know what you're doing. Okay. So there's another range on Google, roughly around 162 to 166 right now. Okay. It's got a little bit dip down into here into 160, but it looks like it's holding up this 162 pretty well. So I'll watch out for Google tomorrow. See if it's at one of these ranges, either at the bottom or the top, and what it does. Okay, if it starts to get weak, and I see the market starting to get weak, and Google gets under 160. It could start fading down here back into 158. I don't think there's any more gaps below on Google. Yeah, there are a little bit, but it's got to clear some of these lows. You see some buyers stacked up here at 156. So, yeah, we'll see what happens there if the market gets weak. The reason I keep presenting the downside is because the upside is pretty clear what we need to clear above. Okay. So until this clears, I'm not really interested personally in the upside unless, you want to scalp in here for calls, but I'm looking at the bigger picture. So I'm not really interested in calls until, Google gets back above 167, clears there, and I can look for a retest and take it up like that. I'm like, cool. I'll just look for further contracts. If Apple gets above 220, cool. I'll look at that. Amazon above 201, like I said, cool. I'll look at that. Let's go to NVIDIA. All right. NVIDIA, very, very interesting right here with MU having reported earnings. NVIDIA 118, if it breaks tomorrow, 118 just can't hold up. And the market, I see SPY and QQQ start fading a little bit faster. NVIDIA could get that pushed down into those lower end of the ranges, and it could get drastic down into 114 and 115. The market's got to get really aggressive if NVIDIA, leads the market, obviously. If it starts getting really aggressive like that, then you're knowing that SPY and QQQ are coming down. So keep an eye on NVIDIA of what it does tomorrow at this 118. If you start seeing more solid candles in one direction or the other, okay, compare that to your SPY, and you see why I have NVIDIA and SPY, QQQ, IWM, and then whatever I'm trading. Typically the main stocks I'm watching here on the right and left. Okay. Tesla, Netflix, I was kind of watching a little bit. Okay. Tesla. Everybody wants to know what's going on with Tesla. 235 is kind of that pivot point right now. Very interesting kind of wide range for Tesla. It is a wild bull for sure. We got a lot of interesting news that's going on, burning Teslas and all that kind of stuff. Elon always running his mouth on Twitter. So Tesla can go either way, maybe clearing above 240. You can get that push and squeeze up into 250 again. If it breaks below this kind of 235, 232 level, right, it could fill that gap below and we start coming down. It's just not as clear because we got gaps above and below. So I'd be a little bit more patient that it's right in the middle of this channel and you want to see a direction first, but you can see bulls are still trying to hold the line here on Tesla to not let it fall. Because if it does, it's coming down pretty aggressively into 200, 199, 191. So I don't think there's anything stopping it really if it starts to break this trend and the market starts getting weak and it starts coming like that. Okay. It could even pop a little bit higher into 250 again, but I think if we regain 250, we can start squeezing and the market will start squeezing. Right. Cool. Palantir. I like Palantir recently because it is trading in a really nice range. So for day trading wise, Palantir has been trading in this 80 to 89 range. Remember what I said before? I like those roughly $3 to $9 ranges, typically $4 to $9. Make a lot of money in those ranges because you can control them, and I can put my size on the contracts a little bit like I want to. So Palantir, really nice at 89, maybe even 88 for starters, early entries. But 89, 88, very heavy level here. If you can see right now, this whole range is just heavy. Okay. Heavy with sellers. That's what we mean by that. Heavy. When you get up here, too many cooks in the kitchen. So when there's too many cooks in the kitchen, people want to exit. Okay. More times. Right there, right there, right there, right there. And then it just pops up again, right there, pops up again, there. And what does it do tomorrow? Do we get drastic? So I really want to pay attention to Palantir for a nice day trade if it breaks this trend and we start getting back underneath that 185 would start getting pretty drastic there. Okay. So that's when it would accelerate, is underneath that 185, maybe 186, but underneath that 185 is this level right here, like 180, not 185, 85 level, that 85 level, and 8460. Okay. And we got a gap fill below. Okay. So I like Palantir tomorrow to watch. MU, and then I'm out of here. Man, it gave back everything, looks like. MU had earnings. Let's do any extended hours here. Yep, popped. Their earnings call must not have been good. So they beat their earnings. Remember what we said earlier at the beginning of the video? They beat their earnings. Earnings call wasn't that good. So what does it do? It kind of failed back underneath previous day high, which was that 104.76. So that is not a good sign for the semiconductor sector necessarily, or MU more specifically. If it continues to turn that previous day high into a rejection tomorrow, or do we recover and retest the high? But if this is a failure, that could aggressively affect NVIDIA. We can start coming down like that. Okay. It's also rejecting, what was that? A couple of days. This is Thursday, Wednesday, Monday's high. We'll turn those red. Red. So that whole area is pretty heavy. Okay. We got some support down here, roughly about 100. Makes sense, psychological level. And there you go. If we get a break underneath 100, that's when MU could get a little bit more aggressive to the downside. And if you look here, there's some gap fills down below, and it's rejecting right at that 200-day moving average. How ironic. So you see, I'm just seeing some really interesting bearish type of sentiments here based off of where these things are reacting off of. Look at that 200-day moving average right there. Got underneath it, holding, big rejection right there. Massive rejection, and we're there right again. This is on heavy watch. I might look at next week contracts for this just to hold it throughout the full day if something crazy happens. All right. Well, that being said, peace, love, and blessings. Hopefully this educated you and gave you some value. Make sure you hit that like button, subscribe button, turn on the notifications. Make sure you join Leverage University. There should be a little small discount code. This is your first time jumping on the platform. Tap that link down below. If you have trouble tapping it, you're more than welcome to DM us, and we'll respond and get you situated. But we'd love to have you in the community, get you ready for next week to end off the month, make some money, learn this skill set, and also get your entrepreneurial spirit going. All right, peace, love, and blessings. Talk to you all in the next one. Bye.